I think they will have to revalue gold. It's in their piggy bank. It's for an emergency. They should at least revalue it to spot. Will they revalue it a bit higher? We're in a desperate state because we're running out of options. It wouldn't surprise me at all if there's a gold revaluation. So I'm taking it seriously. Can we just suddenly wake up one afternoon and see this announcement that gold's been revalued? Sure, it's possible. Let's not forget 1930s America under FDR. Overnight, you can make gold confiscatable and then reprice it for the government's benefit. And that happened overnight.
I am putting you on the spot here, but if you had to say, do you see this happening in this administration, would that be a yes or would that be a no?
I think if it's going to happen in any administration, would be under this one, and not necessarily for the right reason. A revaluation, it's a confession that we're in debt. It's a confession that our dollar is distrusted and less valuable. It's when we weaponized the dollar in 2022, I said everything's going to change now. I think what I'm seeing right now is a watershed moment, a kind of convergence of anxiety and desperation, and yet some paradoxical hope.
You've said that this is the first time in modern history that we're seeing stocks, sovereign debt, and fiat currencies all in crisis at once, and that's the difference this time. So explain what you mean by that, and explain how this convergence of these three pillars crumbling at once plays out and what that could look like.
This is The Real Story with Michelle Makori.
Thank you for joining us. I'm Michelle Makori, and this is The Real Story, where we go beyond the headlines, beneath the surface, and behind the curtain to show you what is really happening with money, markets, and power. The U.S. national debt is now exceeding $37 trillion, over 120% of GDP, and confidence in the system is cracking. Gold is up more than 40% in the past year, and central banks continue to buy gold at record levels. And now what was once dismissed as monetary conspiracy theory is starting to sound like policy prep. The Federal Reserve may be quietly laying the groundwork for revaluing America's gold reserves. On August 1st, the Federal Reserve released a research note titled Official Reserve Revaluations, the International Experience. It outlines how 5 countries used gains on their official gold holdings to raise funds. Now, the Fed note didn't recommend that the U.S. revalue its gold, but it did lay out in detail how 5 other countries have done it. The Fed report explains how countries like Germany, Italy, Lebanon, and South Africa revalued their gold reserves to raise massive sums of cash without selling a single ounce of gold, raising taxes, or issuing new debt. Now, consider this. The U.S. Treasury still values its reported 261 million ounces of gold at $42.22 per ounce, a number that was set back in 1973. Meanwhile, gold is trading north of $3,400. If that gold is marked to market, the result would be an $880 billion windfall. Nice, but not even enough to cover a year's worth of interest payment on the debt. But the speculation here is that if this happened, it would be revalued at a far higher number. And the fact that the Fed may be floating this revaluing idea is adding fuel to this theory. And this isn't just a fringe theory from the gold bug crowd. Former Fed advisor and possible nominee for Fed Governor Judy Shelton supports it. Senator Cynthia Lummis introduced legislation to revalue the gold and use the proceeds for a Bitcoin strategic reserve. Treasury Secretary Scott Bessent has said that we're going to monetize the asset side of the U.S. balance sheet. Now, he did walk that back a little in an interview on Bloomberg, but at the same time confirmed that the U.S. gold in Fort Knox was indeed there and all accounted for. And even Donald Trump Jr. says his father's administration is exploring a powerful economic tool under the Gold Reserve Act to reprice America's gold. He outlines how it would be done and said that this would strengthen America's financial position and signal gold's renewed role in the monetary system. Now, granted, he is saying this in his capacity as a spokesperson for a gold company, but it is a strong signal nonetheless. So is a gold revaluation coming? And if so, what does this all mean and what comes next? is this just a symptom or a response to a much bigger systemic problem that could have historical massive consequences? Is this perhaps the start of a monetary reset? Well, joining me now is someone who has been ahead of the curve on this story for years. Matthew Piepenburg is one of the most incisive macro analysts on the collapse of fiat currencies and the decline of US supremacy. Piepenburg is a partner at von GREYERZ Gold in Zurich, one of the world's top wealth preservation firms. He's a Harvard-trained attorney, a former hedge fund manager, and an ex-chief investment officer of multi-billion-dollar family offices. He's also the author of Rig to Fail and the co-author of Gold Matters. Matthew, thank you so much for joining us. Excited to speak with you.
Well, Michelle, I'm very glad to be here. It's always a pleasure to exchange thoughts with you, and there's certainly no lack of things to discuss today, as you noted from the intro.
We have a lot of ground to cover. Gold revaluation, certainly top of that list. That may be happening, but essentially that is just a symptom or a response to a bigger problem, a system that you say is terminally broken. So before we get into gold revaluation, what that means, how that could play out, let's start with your big picture view. Tell me, how are you seeing the world right now? What is your 50,000-foot macro?
Yeah, listen, I mean, there's easy criticism in the gold space. It's a lot of sensationalism, a lot of clickbait, a lot of permanent negativity. And I understand that. And I want to get to the point where we're looking at facts and drawing our own opinions and not just data mining, but data analyzing. I think before we get into very important examples of what I consider desperate reactions, not necessarily effective reactions, you need to put it in the perspective of the world we're all participants in current events, whether they're market events, currency events, geopolitical or military events. Sometimes it helps to put those current events into past perspectives as well. But I think what I'm seeing right now is a watershed moment, a kind of convergence of anxiety and desperation, and yet some paradoxical hope that the S&P and the White House will save us. And I want to look at that objectively as possible without just being negative. But I think in the larger perspective, we're seeing the worst global relations since 1949, probably the greatest financial bubble in the history of capital markets. Uh, I would think the highest geopolitical, military, and nuclear risk since the Cuban Missile Crisis, and probably the lowest trust in Western governance, again, from the G7 to Jerusalem, from DC to Kiev. There's a distrust in leadership that's pretty palpable. We also, of course, have the greatest debt levels in the history of mankind. And as David Hume said in the 1750s, or von Mises centuries later said, debt destroys nations, it destroys peace, it destroys freedoms. And Ernest Hemingway said in the 1940s that when you see debt-soaked nations, you then see the permanent ruin of currency debasement and war. These are certainly important things to consider right now. And I think also the jig is up on paper money, the inherent purchasing power of fiat money. I think electronic money, including stablecoins, which you introduced, which we'll get into more detail, is just another example of that fantasy empirically. And I don't think it's any different. So the world is moving to gold, I think, which we'll obviously get into as well, as kind of a BS detector on these broken things. But I think in this backdrop of so much dysfunction, financial, political, currency, and debt, there's a lot of desperate policies kind of masquerading as evolutions, as energy, as us, as kind of audacity. And it's certainly good to see energy compared to the last administration. And these policies under Biden or certain policies under Trump, to me, weaponizing the world reserve currency, the whole stablecoin CBDC meme, the tariff policies, the External Revenue Service, even the BTF plan during the banking crisis under Biden, this fantasy that the Fed can control rates and money supply like a thermostat, to keep the economy in order. The dysfunctions we're seeing in the comics and the stories we're being told about that, the idea that we should blame the BRICS for our own overspending in the US, even the conversation, of course, from Judy Shelton on gold-backed U.S. Treasuries, and now from the Fed and the Treasury on gold revaluation. To me, these are desperate, not exciting signs, and I'll give reasons why. I think in this backdrop, I go back to the history too to put it into context. I mean, we have to, comfort our own assessments. You don't have to take my assessment or Willem Middelkoop's assessment or Luke Groman's assessment or Donald Trump's assessment or Egon von Greyer's assessment. But I think, as John Kennedy said, there is something immoral about abandoning your own judgment. And to trust your own judgment, it has to be informed. Again, it doesn't have to be, overlap with mine, but informed judgment gives us some, I think, peace. And I think informed judgment is very hard though, because it means you have to dig into some rabbit holes, some math, not hard math, and you have to look critically at even your own convictions and biases. And it's very hard in geopolitics and certainly in national politics to have an informed opinion with so much noise. But certainly in economics, it can be very hard to have an informed opinion. John Kenneth Galbraith, who was Kennedy's economic advisor, said that economics really aren't there to reveal truth, but to actually kind of disguise and evade truth. That was his final lesson from economics. And it reminds me of the complexity scheme or scam that I see in the markets from when I was a young idiot in the dot-com bubble to something a little bit more educated in markets through being a veteran. But there is so much intentional complexity, complex plumbing in the markets, whether it's central bank policy, whether it's derivatives and swaps and asset-backed security tranches and rating agencies, whether it's the COMEX and the FX exchanges, or certainly now as we get into the stablecoin or Genius Act oxymoron, there is intentional complexity. So it's very hard for the average man or woman on the street to really make an informed opinion on that. And I think that's incumbent upon us. And I'll say that great economists, honest economists, whether it was Lord Mervyn King, who's still in the UK today, said economists are always looking to optimize. They're never looking at reality, that everything's optimizable. And as Richard Werner has made very clear in the last few years, these stochastic models that the Fed uses and the economists use to get tenure or to get popularity in the academic or think tank circles, none of their models have brought inflation to 2% in any of the developing economies over the last centuries. So it's breaking away from consensus think to contrarian think without just being nihilistic thinking. I think it's up to each of us. Again, it doesn't mean just taking my views. And I think the real goal for us and for every conversation is to set out the facts as we know them, draw our own conclusions. I will certainly have mine. But I think gold is calling BS on all of these systems, all of these solutions, all of these models, all of these kind of, I don't know, optimization nonsense, this be calm, carry on, as we're looking at the menu on the Titanic. And again, I've said many times, deciding between duck, fish, or steak, or red or white wine, when we really should be on the deck looking at the iceberg. And no one wants to see that because it's painful and it's unattractive. And, and I'm not just an iceberg looker. I'm not just looking for icebergs, but, I've been bullish many times in my life, but in the bigger, larger section, you can't help but look at these paradoxes with a cynical eye. And I think a critical eye is really necessary right now, Michelle.
Well, we do have you here for your analysis, and I don't think that even back in your youth, anybody would ever describe you as a young, foolish idiot. I'm sure even then you had a lot of insight. But let's talk about this iceberg that we're heading towards, as you say it, while we're contemplating what's on the menu. You've said that this is the first time in modern history that we're seeing stocks, sovereign debt, and fiat currencies all in crisis at once, and that's the difference this time. So explain what you mean by that, and explain how this convergence of these three pillars crumbling at once plays out and what that could look like.
Yeah, and again, I joke it's the Piepenburg broken record. I always start with debt because I think you can't overstate debt enough. And once you understand just the basic concepts of these debt and the basic math, and it doesn't require a lot more facts, whatever strand you pull on, whether it's currencies, whether it's bond markets, even whether it's foreign policy, and certainly whether it's monetary policy, all of this in the bond market and the stock market, everything does come from the credit market, which is the debt market. So all of these things are connected. All this is verbunden. It's all connected. And again, I go back to these simple things. The day of my birth in the 70s, U.S. debt was 200. Public debt, government debt was 246 billion. And where I am today in my lifetime, we're now at 37 trillion. And that's appalling. And a billion versus a trillion isn't just mathematical and isn't just alphabetical, it's mathematical. As John Rubino reminded me a month or two ago, a billion seconds ago was somewhere around 1997, but a trillion seconds ago was 30,000 BC. So these trillions matter. They're not just abstract numbers you throw out to show what you can memorize. And, global debt, it's not just a US problem. Global debt in 1997, when I started my first hedge fund, was at 30 trillion, and now it's at 300 trillion. That's a hockey puck. It's a rocket ship up and to the right in just the last 25 years. So these aren't things I'm just making up. They're real. And it's not just at the market level or the government level that debt is extreme. Household debt is now 97% debt to income. And so, these are the numbers. And in case you think there's no evidence of how those things break things, you don't have to go back a century. You don't have to go back to FDR. You don't have to go back to 1929. Just in the last 6 to 7 years, it started, and I thought it was completely ignored by the mainstream media and the financial consensus RIA industrial complex. But the 2019 repo crisis was a disaster. It was a credit crisis. It was because of a debt crisis. And just a year later in March, during the COVID hysteria, that was also not a COVID-induced 2020 market plunge. That was a bond market-induced market plunge in 2020 because bonds and stocks fell together in 2020. And just 2 years later, across the pond in the UK, we had the gilt crisis. That was sovereign UK bonds being unloved, undesired, and yields spiking and the cost of debt skyrocketing. The next year in the US, we've already forgotten the headlines. You and I talked about it years back. We had that banking crisis in 2023. Four of the five largest bank failures in U.S. history, forgotten. But that too was not a banking crisis. That was a credit crisis. It was a bond crisis. It was the U.S. treasuries that were the underlying collateral on those banks. And then you fast forward to just this year, Liberation Day, the tariff, event, markets losing 10 trillion and then recovering when Trump did the two-step. But that wasn't a tariff crisis. That was a U.S. Treasury debt crisis because right after Liberation Day, there were crickets at the U.S. Treasury auctions and massive sell-offs by U.S. owners of U.S. Treasuries, not just Japan and China. So those were all examples of a credit crisis, a debt crisis, and a bond crisis. And they were showing us in real time that we're over our skis in debt. And again, it's not just me finding the evidence. The evidence is all around if you're willing to look for it. And in this debt crisis, we have very few options. We can default, which we won't do. So we'll have to inflate away our debt. And the way we do that is dishonest. Inflating away debt just means you have to have an inflation rate higher than your yield on your 10-year, and so you have negative real rates. That's the fancy term. You just have to inflate away your debt. You debase your currency to do that. But the way we do that so dishonestly and disingenuously is we lie about the inflation rate. We just do. The BLS is a fiction source, not an honest math source. And the CPI scale used to measure that inflation scale has been, changed 22 times since 1980. It's probably closer to 10%. So we're running negative real rates. We're running a debased currency policy. We're running an invisible tax on the people, lower, middle to upper class, to basically pay our debt by debasing the dollar, as von Mises, as David Hume, as even Ernest Hemingway warned, who weren't, all in the same generation. This is Ima Vida Gleica are always the same. And I think this debt is so powerful that as we talk about stablecoins, or we talk about the markets, or we talk about tariffs, or any of these topics that are making current headlines, they're as old as history itself. We're in a desperate state because we're running out of options. And when you get to a debt to GDP level at World War II levels with no war, the emergency isn't war. The emergency is our own overspending and the mismanagement and criminal negligence of our monetary policymakers and our leadership, left or right, because all of these nations and all of these policies and all of these parties, whether it's Democrat or Republican, to me are just two stirrups to the same saddle. They spend more than they can to get short-term dopamine rush for political reasons, not for longer-term thinking.
Okay, a lot to unpack there, but let's begin with, you mentioned the tariffs and you mentioned President Trump, and say what you will about him. He's trying new tactics. He's playing the long game here. And arguably, many would say for the greater good of the country. He's using those aggressive tariffs to rebalance in the US's favor, but not just as leverage, but as a tool to bring back supply chains, to rebuild US industry, make America less dependent on adversaries. Now, we have already seen several trade deals signed successfully. I believe there's over $2 trillion in foreign investment pledged from countries like Japan, the EU, South Korea. There's been $150 billion already collected in tariff revenue. Treasury Secretary Scott Bessent projecting more, at least $300 billion by year end. I mean, just the other day, even Apple, arguably the poster child for cheaper labor and global supply chains, is now pledging another $100 billion in U.S. manufacturing, bringing its total to $600 billion. Now, granted, this is to secure exemptions from the new chip tariffs, but it's working. I mean, the goal for the Trump administration is to rebuild American industry, protect national security, regain economic sovereignty, build back the fundamentals of the American economy. Could Trump's strategy, onshoring manufacturing, taxing imports, reshoring supply chains, could that change things? Could that buy more time? Could this delay the systemic reckoning? Could it even prevent the systemic reckoning that you speak of?
Look, let's be very clear. We have to look at tariffs from the positive and the negative. What you've just listed is a very compelling list of positive things, many of which I agree with. One of the reasons I was supportive of Trump was his larger plan of reshoring American labor, reshoring American jobs. Again, I'm from the Midwest. I've seen the Rust Belt. I've seen what offshoring the American dream to China with the World Trade Organization in 2001 under Clinton. That wasn't really China, becoming a bigger market for our blue jeans and things. It was China basically making our blue jeans and things. That was a misreported kind of new world. As I've said many times, the American dream is now made in China. So the idea of reshoring manufacturing, putting on tariffs in some strategic way to convince mostly American CEOs to bring labor back to America is absolutely something I agree with. And there's absolutely no denial, whether you're left or right, that whatever you think of Trump, love or hate, or whatever you think of Biden, love or hate, there's certainly more activity in the current administration than there was under Sleepy Joe. That some people take offense to that. Is that activity bold? Is it intelligent? Is it audacious? Or is it stupid? It depends on people's politics, what they think. I think when we answer the question about tariffs, are they good or bad? Are they inflationary or deflationary? Are they fair? Are they effective? Are they legal? And do they even work? You've got to try and step away from a red or blue lens. And again, look at both sides of the argument. And there's a lot to be said to your point. This is a necessary measure, not a desperate measure, a necessary measure to solve an age-old problem from 2001, to bring the P back into GDP, bring manufacturing back to America. I completely applaud that. The question is it going to work? Is it effective? Is the External Revenue Service incoming revenue offsetting the loss in GDP? How do we predict and make a prognosis on that? The most obvious bear case on this, or the negative case, is we've seen this for the last couple of months. People talking, of course, about Smoot-Hawley. That tariff act came at the top of a market bubble heading into a recession. It didn't end well for the Senate careers of Smoot and Hawley, and it really didn't end well for McKinley, the president who put those tariffs on. That it was an absolute disaster. Here in Europe, if you read the German press or the French press, or you listen to the economists here, they think this reshoring will take decades, years, whether it's pharma, aluminum, steel, whether it's wood, whether it's intermediary parts. That's their perspective. So even though if you're applauding the nobility of taking the first steps, it won't be solved in the near term for Trump, which maybe he's thinking long beyond his legacy, and that's fantastic. That again is, I think, to be determined. There's also the inflationary or deflationary debate about tariffs and which is better or worse in the short-term pain that Bissett and Trump talk about for long-term gain. Hypothetically, a 15% tariff pretty much means a 15% price hike. So it means inflation in certain goods. And as many economists will say, inflation creates its own deflation, because as prices go up too high because of these protective tariffs, that creates its own deflation because demand falls. And so you get deflation. And you can debate that for hours, and many have. And we'll see. And that maybe sounds like a cop-out question, but it hasn't really progressed enough to see whether it's inflationary or deflationary until it really gets into full gear. And then there's also the question of fairness. The anti-Trump camp, and certainly in Europe, where I spend most of my time now, they think it's unfair. A Trump 15% tariff, or a 30% tariff, or negotiating tariff, or a 40% tariff. It depends on the good, whether it's pharma, whether it's aluminum, whether it's steel, whether it's a different asset or a different product. But this kind of negotiation by chaos and these tariffs seem unfair. But I think it's important to remind European listeners as well that the VAT tax, the value added tax that Europe puts on American products, is 20%. It's not a tariff in form or in substance, but it is in form, but it really is in substance. And let's also not forget that China built its entire auto sector behind a 25% tariff wall, when Japan's tariffs were at 0 and the US was at 2.5%, and the EU was at 10. So it's not like Trump is the only bully here playing, for national interest. All nations are self-interested, and all nations have used protective tariffs, or you could say weaponized tariffs in the past, to build their own demand inside their own borders. So you can take both sides of this. The real question, to your point, is this effective?
Right.
Will this be effective? And, a Yale professor was just on the other day talking about this. I've seen studies out of Zurich that are very convincing with their models that tariffs, will take at least a percentage point off our GDP near term, for the next few years, versus the revenues we're bringing in on the external revenue service on these tariff deals. We're going to lose growth because despite the long-term play, the long-term gain, the costs and the deficit spending and the production costs and the wage labor effects are going to be very expensive. That's going to hurt our growth. We really can't grow until we get out of debt, and we're trying to grow first without getting rid of that cannonball of debt. You know, that's the key part. That's what Luke Gromen and I agree on. You can't fix this. You can't even have these policies until we solve the spending and the debt side of it first. So there's the argument that despite the revenues coming in, the flip side of the growth loss, that too is too early to determine. It's academic and theoretical right now. But we saw what happened on Liberation Day with those tariffs. And that obviously, to me, what that said was when Trump was threatening massive tariffs, like 100% tariffs on China, that was a road too far, a bridge too far. And he had to two-step back on that because demand for U.S. Treasuries really tanked on that type of announcement. The August tariffs, those were more foreseen and baked in. So there's still, in Europe, they talk about there's no legal measures in place. There's no even idea how these are going to be papered. And there's a sense that we don't even know how long they're going to last. And a big argument made in Europe, not saying it's right or wrong, it's just important for all of us to look at different sides. Are these tariffs even legal? They're happening, but they're not under investigation. They're being challenged by 11 different courts right now because Article 1, Section 8 says this is the domain of Congress. So where is Congress in all of these executive orders? In Europe, people are wondering, and in Asia, how long will these executive orders last? How long will they be enforceable? Where is the Congress in this? And there is something either entertaining, horrific, or noble about this type of president who can do these type of executive actions almost to some like a monarch rather than a democratically elected president. Again, that's for each of us to decide for ourselves. But to answer your question, Michelle, it's too soon to tell whether GDP will be offset enough by incoming revenues to solve the problem. My view is, as I said from the very beginning, when you're at 120% debt to GDP, when you're at 37 trillion, when your deficit of spending versus tax receipts went from 1 million to now 2 million this year, these things are effective, the hundreds of billions, the 50 billions. But I hate to say it, and again, I'd say this to a Democrat or Republican, they're a guppy solution to a whale of a debt problem. And to me, going back to my original point, love it or hate it, I think these are desperate acts. It's certainly better than doing nothing. But we are at a point where, again, the Wizard of Oz isn't going to solve this. We're going to have to go through some austerity, some constructive destruction, some mean reversion in the markets. If we're really going to admit to ourselves, like we would in a family or a business, that we've spent more than we earn, we're going to have to tighten our belts. We're going to have austerity. We're going to have to cut spending. And where we're going to have to cut spending, the places where the debt to GDP would only be solved is in entitlements and military. And I don't see that happening. So this is where it really becomes a real paradox, regardless of where the S&P is or regardless of what the headlines are. That 37 trillion, that 120% debt to GDP, that bond market being unloved and that de-dollarization that isn't a conspiracy theory is all happening at the same time. That as the debt keeps rising, the bonds keep falling. We're in this desperate phase right now. It doesn't mean the end of the world. It doesn't mean the end of the dollar. But I don't see these as being long-term solutions right now.
All right. On the de-dollarization point, I do want to touch on stablecoins, which may create a new market for treasuries. But before we unpack that, let's focus on the measure that we mentioned at the top of the show, which could fall under what you would call a desperate measure, or perhaps a nuclear button, or perhaps exactly what's needed that maybe could save everything. And that's this gold revaluation. Now, you've long suggested that the U.S. could revalue gold. That idea seems to be gaining traction. As I mentioned, we have a note from the Federal Reserve discussing it. Now, this could just be planting the seed, just putting that idea out there, but the Federal Reserve effectively just cracked open the gold revaluation playbook. In that note, the Fed outlines how countries like Germany, Italy, South Africa, and Lebanon tapped gold gains to raise cash without selling a single ounce of gold. And that Fed note reads, with public debt at high levels, so they're acknowledging that, some governments have begun to explore financing additional expenditures without raising taxes while also not increasing public debt outstanding. One possibility is using proceeds from valuation gains on gold reserves, as has been floated in the US and Belgium recently. Now, for the US, this would involve revaluing the government's 261.5 million troy ounces in gold reserves, the largest gold reserves globally, from a statutory price of $42.22 per troy ounce to current market prices, which at the time of reading this stand at around $3,400 per troy ounce. They have it at $3,300, but that just shows you how gold appreciates since this note was written. So again, the note reviews those rare cases when countries use the proceeds from valuation gains on gold and foreign exchange reserves. It does not explicitly say that the U.S. will do this, that the U.S. should do this, but it did lay it out in detail. So how 5 other countries have done it. What do you make of this? Is the Federal Reserve quietly laying the groundwork for revaluing America's gold reserves? Is it planting seeds here? Do you think a gold revaluation could happen?
Well, again, necessity is the mother of invention, and desperation is the mother of good and bad ideas. Usually, usually bad ideas. And look, I'm a gold bug. I'd love to see gold revalued at a higher price than the bid from the Treasury, so the Fed can push gold up. But before we get to that type of fantasy, that type of clickbait of $20,000 gold by fiat, let's look at the reality of these reports. Let's look at the reality of the ramifications. And let's do our best guessing for each of us to determine on our own. I've been thinking about revaluation for years. That was tinfoil hatted in 2020. Francis Hunt was talking about this years ago too. That was tinfoil hatted. To your point, now it's becoming mainstream. Not surprising, it's becoming mainstream because the debt levels have gotten so exponentially worse. And as far as in the issue, I said at the very beginning, to me, revaluation, just like a gold-backed U.S. Treasury, is a sign of, you could say, sounder money, but it's also a sound of desperation. It's a confession that we're in debt. It's a confession that our dollar is distrusted and less valuable. It's a confession that gold is a far more centralized, central and I think critical asset today than it was treated 10 years ago. So these are all very important for the gold camp. But in terms of the reality of a gold revaluation, this report in August, which I just did a Substack discussion on today, and the one that came out in May, this was a May Fed manual. They're both kind of, you could say, telegraphing in a psyop way or planting the seeds of a possible gold revaluation. And let's think about that. Would it work? These are the reasons. When you read this report, it's very sanguine. Ultimately, the mood is it's a temporary fix only, and we're really not in favor of it. It kind of takes away central bank autonomy. But by the way, Lebanon did it, Curacao did it, Germany did it, Italy did it, etc. And so these are, South Africa did. These are 5 examples from 1997 to 2024 where countries have revalued their gold reserves to get out of a debt problem. And the question then would be, okay, it's been done. That's them kind of suggesting we're not the only ones going this way. Although I wouldn't, comparing the U.S. to Curacao, St. Martin is kind of sad, or Lebanon is kind of sad. There's a whole other rabbit hole there. But that's how desperate we are. I've said many times we have the balance sheet of a banana republic. But okay, we've got $42.22 certificates. We've got 261 ounces. Some say 287 million ounces. If we revalue at the current spot price, that gives us, just shy of 900 billion. Let's say, for simple, good math, obviously, let's say it gives us $1 trillion at the mark-to-market price, which legally on the balance sheet of the Fed and the Treasury, the asset and liability side, that May report says this can be done. So it can be done. And Dissent has said we need to monetize some of our assets and the balance sheet of the Fed. This would obviously be gold. So if we marked gold to market, which is what a Forbes article in February this year said, well, that's $1 trillion. So that helps us a little bit with our, debt to GDP. But again,
it doesn't. It barely covers a year's interest payment on the debt. That's why people are thinking if you're going to do it, you're going to have to revalue it much higher.
Right. Right. And so again, my point was going to be that's a guppy solution to a whale of a problem. Even Doge, as laudable as it was, despite the problems with Elon Musk and Trump, even if Doge succeeded at its policies, that was still a guppy solution to a whale of a problem. Again, better than nothing. So to your point, what's $1 trillion in this backdrop? And that
Unless you
raises the question,
revalue this higher.
exactly. And so there's speculation that we could put in a bid for $20,000 gold, $15,000 gold, $10,000 gold, even at 20,000 gold. If you're getting 5 to 7 trillion, that's a significant dent in the debt to GDP. If we went from 37 to 30 trillion by revaluating gold from an act of fiat at the Treasury and the White House, that would definitely get our debt to GDP at a place where you could argue growth is possible. And you could argue that makes sense. That's not desperate. That's common sense. Let's take those $42 certificates and give them something bigger than market. But then you're creating an entirely new floor for the gold price, which for gold bugs like us would be fantastic. I certainly wouldn't. I should be selling that book all day long. But realistically, you've got to go back to Kissinger's warning about revaluing gold, because this is my opinion. It's only my opinion. It's in the face of the World Gold Council. But my opinion is that China and Russia have significantly more ounces of gold than the US does. And that I cannot back other than with other kind of reports I've read from contrarians who looked at these producers of gold, how they report their gold, how they store their gold, how their citizens own their gold. It's my opinion that if we revalue gold to 20,000, that would certainly, or 15,000, again, I'm speculating, no one knows. But if we did revalue gold higher, the adage, he who has the most gold wins, would apply. I think that would certainly help us in the near term with basically using gold as QE, because certainly by monetizing gold and repricing gold, that's better than just creating money out of thin air to pay down our debt like we do at the Fed. If we monetize and revalue gold to pay down our debt, it's 7 trillion or 5 trillion, depending on where we revalued it at. That would be a short-term boon for the US, for sure. That would bring our debt down significantly. But then in terms of our global leverage, and this is what Kissinger warned about many years ago, well, then what is China and Russia with their own exchanges in St. Petersburg and Shanghai? You think they're going to float a gold price at spot today? If we go to 20 or 15,000, they're going to price it more fairly, and they're going to have, I think, more ounces of us and therefore more leverage with their currency and with their trade than us. That's my view. Again, take it or leave it. Some would disagree. But I think the tone right now of these May reports and August reports is it's still, to me, a long shot that they would revalue higher than spot. But on the flip side of that, let's not forget 1930s America under FDR. Overnight, you can make gold confiscatable and then reprice it for the government's benefit. And that happened overnight. Let's not forget 1971, literally 54 years ago this month, when Nixon just got on the phone and said, this is a temporary measure. We're going to decouple from gold. It's going to be very temporary. And your dollar will be worth just as much tomorrow as today. Again, we know that the dollar's lost 99% of its value against gold since that famous lie. But is America under Trump? Is this the Nixon America or the FDR America? Can we just suddenly wake up one afternoon and see this announcement that gold's been revalued? Sure, it's possible. Is it likely? Who am I to say? I would certainly love to see gold revalued as a gold owner. But right now, based on the tone of these reports and the message, it's very hard to determine. It wouldn't surprise me at all if there's a gold revaluation. I just wrote 2 articles on it. So I'm taking it seriously, but I've got to hedge my own bias. I've got to hedge my own kind of sensationalism here. None of us really know. Bassett has talked about it. At the very least, I would not be shocked to see gold revalued at spot at the market, mark to market. But the question is, to your point, Michelle, is that really much of a help? We'll see. And unfortunately, that's all I can say is we'll see.
Well, that does bring up the question of what that signals about the dollar if the US does go ahead and make this move,
Sure.
if that signals lack of confidence and faith in the dollar. But I do want to focus a bit more on this buzz that this is getting, because it is interesting that this was some fringe theory by gold bugs.
Yeah.
And it's really becoming more of a mainstream idea. And again, what I was saying to one of my previous guests is that if we've learned anything the last couple of years, is that conspiracy theories and facts and reality, sometimes it's just a little bit of time in between before a conspiracy theory becomes an established fact. And look, we did have former Fed advisor Judy Shelton supporting it. She told Andy Schechtman that she expects Trump to issue a gold-linked treasury bond next year to commemorate the 250-year anniversary of the U.S. on July 4th. Senator Cynthia Lummis, she's introduced legislation to revalue the gold. She wants to use those proceeds for a Bitcoin strategic reserve, but that's the legislation that is in there. You mentioned Secretary of the Treasury, Scott Bessent. He said in early February, we're going to monetize the asset side of the U.S. balance sheet for the American people. There'll be a combination of liquid assets, assets that we have in this country, as we work to bring them out for the American people. I mean, I don't know, what could those assets be? We've got some land. We've got some, student debt. It's mostly, it's mostly the gold. Now, to be fair, he did walk that back in an interview on Bloomberg. But on that same interview, he was very adamant to confirm that, yes, all the gold that we say is in Fort Knox is indeed there and accounted for. That's after Elon Musk was calling for a gold audit. And Bessent has made a lot of interesting comments about gold, more so than I think previous Treasury secretaries. He spoke on Tucker Carlson, made a very interesting comment how gold cannot have a gigantic budget deficit, how gold cannot have a war. I think we have that clip and we can play that.
Gold can't have a fiscal problem. Gold cannot have a gigantic budget deficit. Gold cannot have a war. So just the fact that it is this isolated thing makes it very interesting. And the fact that the entire global trading system, until Richard Nixon took us off, was tied to gold. When I had my fund, I think people might have called me a gold bug.
Right. I mean, there he says it. Gold bug running the Treasury. He's also said in the past, we're going to have some kind of a grand global economic reordering. I'd like to be part of it. I've studied this. I would like to be part of Bretton Woods type realignments. That was on the Capital Allocators.
I also felt
podcast.
very strongly that we're in the midst of a great realignment, kind of a Bretton Woods realignment coming in terms of global policy, global trade. There's a lot of what I taught at Yale. I've been studying my whole life. I'd like to be part of it, either on the inside or the out.
I don't know. I mean, Matthew, it's some very compelling sound bites. And again, we've got the president's own son, Donald Trump Jr., saying that his father's administration may revalue the gold. Now, granted, he is saying this in a gold ad. He's saying this in the capacity of a paid spokesperson for a gold company. But here is what the ad says in his own words. Patriot, did you know the U.S. government has the legal power to change the price of gold with a stroke of a pen? He goes on to say, my father's administration is exploring a powerful economic tool, the Gold Reserve Act. This law gives the Treasury the authority to revalue America's gold reserves on the national balance sheet from their outdated book value of $42 to current market prices. Why would my father's administration do this? It would immediately strengthen America's financial position, signal gold's renewed importance in our monetary system, prepare America for a new era of sound money principles. We've also got Steve Bannon now encouraging President Trump to tap Judy Shelton for the Federal Reserve governorship seat that's apparently available now. So again, I'm not pushing this theory, but it does seem that this is gaining a lot of traction, a lot of buzz, which a year ago would have been laughable. We have seen the Trump administration very open to new tactics and new approaches, very keen to address what it sees are long-term problems, even if it means some short-term pain. For the long-term greater good, we have seen this. I guess, again, the likelihood, and I am putting you on the spot here, but if you had to say, do you see this happening in this administration, would that be a yes or would that be a no?
I think if it's going to happen in any administration, it would be under this one, and not necessarily for the right reasons. You make a lot of different points in these sound bites and in your intro, because first of all, it is very true. The things that were conspiracy theories and quacky just a year ago are now at the mainstream. Is that a good or bad thing? Is that an audacious thing or a smart thing? What I was talking about, a gold revaluation, or Francis Hunt was 4 years ago, that was crazy. When I was talking about the dollar moving away from the petrodollar. That was crazy. Now that's happening in real time. When I wrote in two, and again, I'm not just saying this, I was not alone in this. Many said this. When we weaponized the dollar in 2022, I said everything's going to change now. Demand for the US dollar, trust in the US dollar, stacking of gold by central banks, the empirical evidence of that, sovereign wealth funds, the decline in the demand for the dollar, the faults in the milkshake theory under Brent Johnson, despite euro dollar and SWIFT and derivative demand, what he's missing is US Treasury demand is going to fail. So all these things happen and gold becomes more and more powerful. I think these theories miss, and what you're saying is very true. The role of gold, whether it's Shelton's US Treasury, gold-backed US Treasury, which has a lot of constitutional law attempts in the past that failed, and we can talk, I've written about that extensively. But the fact that we're talking about a gold-backed US Treasury or even thinking about a gold revaluation to market or higher is the first thing we can all agree on is it shows that gold is now far more central to the conversation of sound money. Bretton Woods 2.0, which the Senate has been talking about for months. Bretton Woods came after World War II after a disaster. I've been saying for years, and again, not alone, that we're going to have, as the IMF projected during the COVID hysteria, they announced a Bretton Woods 2.0. You go to their website, it's literally called Bretton Woods 2.0. And the graph they show, and I can send it to you, literally has gold at the foundation of that new central bank digital currency reaction to the debt crisis, which they blamed exclusively on COVID, but it was entirely the fault of central banks and policymakers and credit issuers. So your first point is gold is now no longer the fringe, pet rock, kooky asset. And that, again, is regardless of whether you're a gold bug, you could be a Yale professor or Treasury Secretary Treasury and be saying this out loud. You can be the president and saying this out loud. You could be Shelton and saying this out loud. We're going well past the DXY up or down debate, gold inflationary, deflationary debate, gold is a pet rock debate. We're now seeing gold from central banks to private wealth managers, to sovereign wealth funds, to politicians and central bankers talking about gold as central to their thesis. But again, when you look at the report that just came out, to answer your question, will they actually, revalue gold or revalue these certificates? I think they will revalue the certificates to answer your question. Will they revalue 42 to 3,400, 3,500 gold? Or will they revalue it to something where they set a new bid and create a new floor for gold? That is a stretch. That is certainly possible. It's no less likely than Nixon decoupling in 71. So who am I to say? But if you read that report, even the central bankers themselves, because we're worried about their independence, said, if we did that, and they were talking about mark to market, maybe not even going to a higher bid, they said this may not address larger structural issues. And what they're saying is, and this is where I think I hate to say it, I actually agree with these central bankers, of which I'm no fan. Even if we did a 20,000 floor, which we could, I'm not saying it's impossible, and we got trillions more in QE through gold, and we brought our debt to GDP down, that is still, in their mind, just a temporary fix from these larger structural problems, they call it. And those larger structural problems are still, even if we got massive QE out of gold, revaluing gold, we still were looking at 30 or 35, depending in the next year's spending. We're still only buying a little bit of time before we're right back on that crack addiction to more debt, more deficit spending, which will come from reshoring jobs because we're going to have some short-term pain or shorter, longer-term pain. This is one way to solve that problem. And this is one way, if we have a gold-backed 10-year treasury or a gold-backed treasury option, of bringing gold back into the forefront, paying down some of our debt, and confessing that our dollar and U.S. Treasury is no longer as respected as it was pre-2022. So this is all evidence of the things you and I have been talking about. And you say you're putting me on the spot. I think they will have to revalue gold. It's in their piggy bank. It's for an emergency. They should at least revalue it to spot. Will they revalue it a bit higher? Again, that would be great for America's debt, as Trump Jr. says. But what we're going to go back to my Kissinger warning. If you revalue gold and create a new gold floor in the U.S. and trade it on the COMEX in London at a new price, you have to ask yourself, in the global context, if we're so worried about Russia and China, and that's a personal decision, certainly is on the minds of our central bankers and our policymakers in DC, you have to say, does China really only have a few thousand tons? Does Russia only have a few thousand tons? In other words, or do they have a lot more than the U.S.? We had 9,000 tons in 71. Now we have about 8,000 tons. Is that accurate? They're saying it is. It could be more, it could be less. My opinion, and it's just my opinion, is that Russia and China have more. And so that goes right back to that question. So yes, gold revaluation higher than spot certainly helps our debt, certainly creates new liquidity for a very dry, illiquid market, which is on the teetering of risk. And it would help America in the short term, but be careful what you ask for, because there are other countries that own gold too. And what would England do? What would England's position be after Brown sold all its gold at 270 in 1981? So these are things that are more out there than just these two reports and some quotes online. But, as a gold bug, of course, I'd love to say absolutely it's coming, and I'll be happy to see it come. But I can't say with straight confidence that that's a smart decision.
Right. Look, 2 points to unpack there. But let's begin with what you're saying would be the reaction. That you're going off the premise that China and or Russia have more gold than the U.S.
Possibly.
Some officially on record, the U.S. has the most gold. Some people question that, saying that Fort Knox hasn't been audited. Maybe the gold isn't even there. Maybe the gold has been rehypothecated. Other people, Edward Dowd came on the show. He said he thinks Fort Knox has more gold because he points to Saddam Hussein's gold, Gaddafi's gold, some Ukrainian gold. A conspiracy theory, but he's a contrarian. He thinks we probably have more gold. Andy Schechtman believes that the U.S. has been secretly buying gold through a covert shadow program, and he points to the fact that the U.S. has become a net importer of gold. I believe just this year alone, 720 tons of gold have made it into the U.S., according to the COMEX. So there are some debates as to whether the U.S. is the top gold holder or not. But either way, the U.S. currently enjoys the exorbitant privilege of being the global reserve currency, irrespective of gold. You've mentioned de-dollarization and weaponizing the dollar and people losing faith in the dollar. Would revaluing gold signal that the U.S. no longer has confidence in the dollar itself? Does this accelerate de-dollarization? What kind of message would that send?
Again, exactly, Michelle. This is a confession. And I'm all in favor if they do it as a gold owner, as a physical gold owner. I'd love to see them revalue gold at a much higher price floor, because that's fantastic for my bottom line. But stepping back from my personal self-interest and bias, this is a sign that we are desperate. We are in debt. We can't keep QEing to the moon. We can't keep mouse clicking zeros and creating money ex nihilo out of nothing to monetize our debt, because we're losing credibility for our own debt, our own IOUs, our own US treasuries. We're losing credibility for our US dollar. And that de-dollarization theme wasn't just because America was debt over its skis in debt and less trusted just because of the level of its debt, but also because we weaponized that dollar. We froze the FX reserves of a major nuclear power already in allegiance and trade alliances with China. We put China and Russia closer together, not further apart. It was an absolute disaster. I've said, and many others, it was one of the worst decisions we've made. But the de-dollarization that came subsequent to the weaponization of the dollar and the rise of the BRICS is no coincidence. And to your other point, this de-dollarization, which is not a conspiracy theory, it's a very strong reality. And the rise of the BRICS is a very strong reality. And the selling of dollars or oil outside the petrodollar, the Russia yuan sale of oil in China, these are all massive things. But to your point, if we do revalue gold at price market or higher, that is a confession that our dollar and our treasury is not enough to get us out of this debt crisis. There's not enough demand, and we can't keep printing and keep the credibility. So we're going to that old pet rock, the old reliable that gets the last laugh in a crisis. I think it is, again, to my original point, a desperate sign, a temporarily effective sign. Even this new white paper that you're talking about from the Fed, it is, they say, just a quick fix, and it won't fix the larger structural issues, but it certainly would be the type of dopamine rush that the politicians like. It certainly will help in the short term, but it is a confession that our dollar and treasury is not enough to inflate our way out of this debt crisis without losing more credibility for that dollar and that US treasury, which is empirically and objectively losing value since 2022. Again, Andy knows this, the COMEX flows know this, the BIS has made gold a tier one asset. Average central bank purchases per year by central banks were at 118 tons in pre-2022. Post the weaponization, that went to 290 tons. So what we're seeing with central bank stacking, what we're seeing with the BIS, the mother bank, the dark star of all central banks, giving it tier one status as of July 1st, what we're seeing with the BRICS de-dollarization, what we're seeing with the petrodollar, what we're seeing with the repatriation of gold, certainly what we're seeing with the COMEX disaster and the float rates in gold and silver are all proof, not gold bug proof, objective proof that nations and sovereign wealth funds and high net worths and counterparties and commercial banks want physical gold more than they want US treasuries and US dollars. And that's what we've been warning for years. And now even Trump and even Bessent possibly want to do something with their gold. Great, it may help. But what we're really seeing, Michelle, what this really is a symptom of is gold becoming central to the solution. This is not a gold-backed dollar. This is not a gold-backed stable US dollar. This is just gold in the piggy bank that we can revalue as a desperate proof that we're so broke, we'll try this. And to your point, we may have more gold. There are US trusts at Sullivan and Cromwell, New York, that we don't know the names of. Maybe they stole gold from China or Japan after Japan pillaged China. I don't know. That's a Tom Clancy novel. It could be much more than 8,000 tons, could be less. But I do think, from talking to Alistair McLeod and others, and based on what supply and demand forces and the fact that Russia and China are major producers and their citizens and bankers are holding it, I think China and Russia have more. Do I know the exact amount? No, I don't. But it will be very destabilizing. So there is a lot of strings to pull on this revaluation point, is what I'm trying to say, Michelle. But it is a symptom that the dollar isn't the dollar it was 10 years ago, and certainly not what it was pre-weaponization in 2022.
And I recall in our interview, I believe it was circa 2022, that you said that the excessive weaponization of the dollar by the Biden administration, kicking Russia off the SWIFT system, combined with the debacle of the withdrawal from Afghanistan, would be a turning point. That this would be a moment that we would come back to look at in history as a tipping point, the beginning of the end. And we did subsequently see that de-dollarization trend accelerate quite dramatically since then. Ray Dalio, as we know, obviously speaks about the rise and fall of empires and of civilizations. And we know that global currencies come and go. I always like to point out the fact that there was a time when the Portuguese escudo was the global reserve currency. And people forget they have recency bias. Again, this is not certainly anything I'm rooting for. As a proud American, certainly not rooting for this. But Ray Dalio posted recently, the US dollar used to be backed by gold, and it's not far-fetched to think we may be headed there again in the future. History shows us that the same cycles repeat time and time again. One such cycle is related to currency devaluation. Once people start to lose trust in the fiat system, we see a specific cause and effect reaction occur. Governments print a lot of money. They pay off the debt with the cheap money. Nobody wants to hold the devalued currency. Governments go back and link money to gold. Will this same pattern happen again? It's hard to say, and it wouldn't happen anytime soon, but it is conceivable. So he's not saying it's happening anytime soon. I suppose that's the plus side. But the US may be forced into this position. You mentioned the BRICS, and we are seeing them move away from the dollar. There was some talk of a BRICS-backed common currency backed by gold. China is putting together some digital yuan global settlement system with gold as an underneath layer of all of this. Could the U.S., be forced into this position? You're saying, this is a desperate measure. You're saying, the Trump tactics aren't going to work, at least not anytime soon. We haven't really touched on stable coins, but even though they're supposed to create more demand for treasuries, I'm assuming, well, that could be a backdoor to a CBDC, which we'll get into, but I'm assuming you don't see that as any kind of big, rescue plan here. So what happens? You're saying gold is going to become part of a monetary system backbone. How do you see this happening? How do you see this playing out? What do you think is the next stage here, whether we revalue the gold or not?
Listen, I'm a huge fan of Ray Dalio, and I think he has a point, but I do not see a gold-backed US dollar anytime soon at all. And I'll give you the reasons why. And I never saw a gold-backed BRICS currency even during the hype 3 years ago when they were meeting in South Africa or when they were meeting in other places. I never saw a gold-backed BRICS currency. I don't see a gold-backed US dollar. And the reason why is because it's the William Jennings Bryan cross of gold speech at the turn of the century. A gold backed currency, sound money, which I would love to see because it's a chaperone on how much money you can create to monetize your debt, is what, by the way, the founders of our country and the writers of our Constitution warned us of and said we should never leave. But once you leave it, it's too addictive to stop. In other words, gold was supposed to be a chaperone, and it is sound money, but a gold backed currency is that chaperone on the currency. It limits the amount of spending, it limits the amount of debt, it limits the amount of credit a country that can produce. And unfortunately, modern governments are so addicted to easy money and credit and the political power being able to produce and spend beyond their means by monetizing that debt with fiat rather than gold backed money, because fiat money gives them no limits, gold gives them limits. So the realpolitik is countries don't want to limit their ability to debase their currency to stay in power and blame it on some extraneous event. So no, I don't see a US dollar being backed by gold. I never saw with the BRICS. What the BRICS have done isn't make a gold-backed BRICS currency. They've made gold a neutral reserve or a trade settlement assets. In other words, you can trade in local currencies for hard assets or goods and then cover the delta with gold, because even the BRICS don't always trust each other or agree with each other on everything, but they do agree on gold for trade settlement. And again, that's what I see with the US. They're not going to use a gold revaluation to get a gold backed dollar. They're using gold revaluation to give them some quick cash to pay down some debt. It's like you find it in your mother's purse and you use it to pay down some debt. They found some gold at the Fed. It's got some certificates that can be revalued. Let's use this to pay down some debt. But that does not mean they're going to a gold backed dollar. And I wrote an article a few months back about the death of constitutional money when we got off the gold standard, when we got off a gold backed dollar that was promised to us by our founding fathers, who warned us 250 years ago that if we go off the gold standard, we'll eventually destroy ourselves. That's why Article 1, Section 8 says gold and silver. But during the Civil War, which was a national security crisis, obviously, which I've studied both as an economist and as a geek, I'm fascinated by the Civil War, but we got into the greenback. We got off the gold standard. That was temporary. We then had resumption acts that followed. I won't get into the weeds. We even got into a discussion about a gold backed treasury in those days. Bottom line, and the theme of that article was, when things are going well, we'll look at sound money. As soon as things are going bad, we get off the sound money. We don't talk about it anymore, and we just get off it altogether. 1971 put the nail in the coffin on that. But even U.S. Treasuries, the courts were asked to back that with gold, and the court said, no, our dollar is just as good as gold and silver anyway. I'm simplifying, but that just wasn't true. And now what we're seeing is we do know that our dollar isn't that good. We do need it gold backed, and we'll probably have to do it in the treasury. But no, I don't think we'll back our dollar with gold, because that would limit our ability to run negative rates and inflate our way out of debt on the backs of the average citizen. And I don't even think the BRICS want a gold backed BRICS currency. They want to use it as a trade settlement. It gives them leverage in the world. They want to save in gold and spend in regional currencies, because gold is a better store of value than any sovereign bond, including the US Treasury, and any currency, including the US dollar. And that is the message I want viewers to get. Gold stores its value better than paper money. And that's why central banks and sovereign wealth funds, and even the US, understands this. And that's why investors can understand this too. They spend in fiat, they save in gold. They don't want to save anymore in the US 10-year Treasury, that risk-free return, which I've said many times is just return-free risk. The jig is up on the over-indebted, criminally negligently run US IOU, and the jig is up on the dollar. It does not mean the end of the dollar. It does not mean the DXY goes to 50. It just means the dollar is going to be repriced. And that's happening in real time. We're all excited about the dollar rising. It was at 108 at the beginning of this year. It's what, at 98? Again, Brent Johnson and I have argued about this. He's very smart. He could be right. But I'm saying what's missing in that argument is the love for US Treasuries is quantifiably changed. The trust in it is quantifiably changed. And the desire by institutional money from the BIS to the IMF is clearly pointing towards physical gold, that analog pet rock. This is not a gold bug case. It is empirically and objectively the case. And we saw this coming the direction of this puck since 2022 and then some. But again, it's not an I told you so moment. It's just following debt. It's following gold movement. It's following the price allocation. And again, it's not meant to be smug. It's very sad when gold is at 4,800, 5,800. 6,000 because that means the price of a loaf of bread, a doctor's visit, or a dental trip is going to be more. Gold is not a speculation asset. It is to keep you from getting poor. It is to keep you protected from the invisible tax of currency debasement. Again, David Hume, von Mises, Ernest Hemingway, etc. This has been part of history, not just part of current speculation.
And you have said, Matthew, currency debasement, then war. So you're saying that, okay, you don't see necessarily the end of the dollar. I absolutely understand why central banks do not want to have a gold-backed currency. It does limit their ability to click money. But you're saying there's a problem. You're saying revaluing isn't really going to be a solution. You're saying the dollar is still in this picture somehow, some way. But you're also saying, as you've said in the past, that currency debasement leads to war, that we are in the highest geopolitical tensions, I believe you say, since the Cuban Missile Crisis. We do have President Trump saying that the BRICS attacking the dollar is an act of war, and it's something that he's not going to let happen. We can play that soundbite, and I'll get your thoughts on what that means on the other side.
BRICS was set up to degenerate our dollar and take our dollar as the standard, take it off as the standard. And that's okay if they want to play that game, but I can play that game too. So anybody that's in BRICS is getting a 10% charge. But what they're trying to do is destroy the dollar so that another country can take over and be the standard. And we're not going to lose the standard at any time. And if we lost the world standard dollar, that would be like losing a war, a major world war. We would not be the same country any longer. We're not going to let that happen. The dollar, you ever hear the expression, dollar is king? The dollar is king. We're going to keep it that way, okay?
So what do you read from that, given the background and everything we've just discussed? I mean, could there be some kind of war to maintain the dollar's status as the king?
Well, look, there's a lot to unpack there, and there's a lot, favorable, unfavorable. Again, I want to give both sides to anything. I'm not trying to be partisan. I'm trying as hard as I can to be historical and mathematical. I'm even thinking of Jim Rickards, who wrote about currency wars, then trade wars, and then hot wars. These are, things that he's talked about. And there's Colonel McGregor, and there's others who are far more knowledgeable about military solutions or military options in this backdrop. When we look at that segment from Trump, the BRICS are trying to degenerate our dollar. Okay, there's no doubt that the BRICS are trying to are tired of being the dog wagged by the tail of the U.S. Fed and the U.S. dollar and monetary policies, because we can inflate away our debt. That's the exorbitant privilege of having the world reserve currency. As Connolly said, it's our currency, your problem. We'll raise or weaken the dollar. We'll raise or lower rates, and the rest of the world has to react with their own currencies, and that's called seigniorage. It's kind of being at the mercy of these feudal lords in the U.S. with their dollar. And so the BRICS, he's saying, are trying to degenerate the dollar. No, they're just tired of being dictated by the dollar. This was made easier by the BRICS after we weaponized that dollar against the R in BRICS in 2022. And that was kind of the straw that broke the camel's back. As I've talked for years, Russia and China were looking for the pretext. This wasn't plan B. This was plan A. They wanted to de-dollarize for years. The weaponization of that dollar in 2022, which again, Barack Obama warned against, Robert Triffin warned against, John Maynard Keynes warned against, but somehow the Biden administration thought that was a good idea. The rest of the world no longer trusted the dollar after that seminal event. So first of all, yes, the BRICS are not trying to degenerate the dollar. They're just trying to move around the marginal line of the dollar and trade outside of the dollar. And really, again, trade in local currencies for hard assets and then net settle in physical gold. The other thing I think Trump is missing, but again, he's the president of the United States. He understands this. The other thing I think he's missing is that the BRICS didn't destroy the dollar. The bathroom mirror of every president since Nixon and every Fed chairman has been destroying the dollar since 1971 in particular. And frankly, since we destroyed constitutional money in our Constitution, again, that sounds sensational, but it's us running massive deficits, running massive fiscal spending, running massive monetary policies under the fantasy that we can print money and solve it without having inflation. And this is something that Jeffrey Sachs talked about in Atlanta a couple months. And again, the Trump camp who are going to be offended by this, but this is beyond left or right. What Jeffrey Sachs said about the dollar and about our deficits is it was very simple. If you and your wife or you and your husband go shopping on Rodeo Drive or Worth Avenue or Madison Avenue, and you spend a fortune on your credit card and you get that dopamine rush, you get that temporary prosperity of feeling smart, and then you get the bill and you look at how much in debt you are and what a deficit you're running, you cannot blame the stores on Rodeo Drive or Worth Avenue or Madison Avenue for your credit card debt. And in a sense, what Jeffrey Sachs was saying, again, he's a fairly clever guy, is Trump, like many other presidents, is blaming the world. He's blaming the shop owner for his spending habits or our historical spending habits. So again, we cannot blame just the BRICS for wanting to get away from a dollar that they've been had a boot to the neck on for decades. We can't blame them for wanting to go around that dollar, that weaponized dollar. And we certainly can't blame the world for our debt addiction and our spending mania. Again, red and blue, every president since I've been born has been spending. And David Stockman from my hometown, who was Treasury, who was under the CBO for Reagan, he was his advisor. He was a Republican. He was pro-America, but he said we're spending on credit card spending. So it's not just me or gold bugs or anti-Trump or anti-Biden camp. We're all guilty. All sides of the political aisle are guilty of spending money to stay in power and then giving the inflation bill to the man and woman on the street who are getting this frog-boiled invisible tax of misreported inflation and are wondering why they're so socially unrested and so broke, and why business bankruptcies and small business bankruptcies are at all-time highs, why the pay now or buy now, pay later programs are so big, while small business bankruptcies are rising, why retail sales are declining. Again, all these recession indicators that I've talked about before on Main Street, that's the fault of our own bathroom mirrors. That's the fault of our own policymakers. That's the fault of our own politicians, who, in my opinion, are pathologically more interested in reelection than they are in the next 20 years. And Thomas Hernick, who was the president of the Kansas City Fed, who dissented on almost everything in modern monetary theory and money printing. He was told by his mentor that a federal officer, an FOMC member, should make policies for the long term and let the short term take care of itself. That is very noble. Unfortunately, the reality is every elected official in the Senate, the House, and the White House is far more interested in the next 2 years or the next 4 years than they are in the next 20 years, which is why we've handed the next generation a dollar that when I was born, $100 was $100. Now, from 1971 to 2025, that same $100 has a $13 purchasing power. That is a slow, invisible tax. That is currency debasement. That is appalling evidence that we have spent more than we take in GDP and tax receipts. And whatever you think of the BRICS, and of course they have self-interest, that is not the fault of the BRICS. That is the fault of our own drunken, criminally negligent monetary policy from the White House, from the Congress, and from the Fed. And the Fed, we can talk about, deserves some sympathy. They are trying to monetize the debt that our Congress and our Hill on the Hill spend. So you could give them some sympathy for the devil, but it really is the spending of our politicians, because there's short-term pleasure and there's short-term votes and spending beyond our means. But we've done that at the expense of our currency, and that is not the fault of the BRICS, Michelle.
Okay, we're not assigning fault to BRICS. They have their perspectives, obviously. Western powers have their perspective. This isn't about fault. And yes, politicians, blue or red, have their own incentives and their own agendas, and staying in power is usually top of the list there. But given we are where we are, Matthew, my question to you, seeing as you've studied the history and you've studied the data, what happens next? I mean, people are talking about some kind of monetary reset. Hence, we're talking about gold. You've said we have a system that's terminally ill, that can't be fixed. So what happens next here? Do we have some kind of war where the U.S. or somehow fights to maintain the exorbitant privilege that is being the global reserve currency? Do we have some kind of cooperation, some kind of Bretton Woods agreement where, even though that was preceded by a war, which the U.S. helped win and then hence had leverage at the negotiating table there. But do you think when people talk about the bifurcation of the global monetary system and a monetary reset, do you think that that is a reality that is inevitable, yes, but also somewhat imminent in our lifetimes?
I mean, we all have to, none of us know for sure. I certainly don't. And again, you can use the Hemingway quote that all debt-soaked nations enjoy a temporary prosperity of the debt and then the permanent ruin of currency debasement and war. That was in a pre-nuclear era when he said that. Is war really an effective policy in a nuclear era? That's beyond my expertise. I didn't go to West Point, and there are certain people that think there are certain ways to win a tactical nuclear advantage. I don't know how that works. You can have smaller scale proxy wars like between Pakistan and India, or Thailand and Cambodia, and you can certainly have disastrous conflicts like we see in the Middle East or in Kiev. We definitely do see currency debasement and war. In terms of looking forward, is tariff policy just another form of financial war? World reserve currency status, that what Trump just said, there are many economists. You cannot have the world reserve currency status without military dominance. So these things are tied together: the world reserve currency status and military dominance. Um, but again, who am I to predict and who am I to make Pollyanna statements? It certainly makes more sense to me when I see wars that, as Jeffrey Sachs and John Mersheimer have said, our foreign policy since Vietnam and certainly since Iraq has been a disaster. I'll say this over and over as a friend of many veterans and as a family of veterans. I never blame this on the soldiers. I've said so many times. These are lions being led by donkeys. But even the soldiers I know who are in Iraq or Afghanistan from my hometown come back and say to me, what the hell was I doing there? After a few years of reflection, a lot of PTSD. But the question isn't, are the soldiers themselves right? I agree with Mersheimer. I agree with Jeffrey Sachs, not because they're elitists at Chicago or Columbia, but because they're very smart and informed historians of our foreign policy. That our wars since Iraq, including Iraq and the non-weapons of mass destruction and the dishonesty at the UN and what we were told about weapons of mass destruction, I think they're all disastrous. There hasn't been a good one since. And I think, like Jeffrey Sachs, that the war in the Ukraine was avoidable. That's not pro Putin or Zelensky. We were right on the border of a peace deal in Turkey, and Boris Johnson, of all people, came in with Kamala Harris and blew that up. It's almost as if that was an intentionally created war. That's a rabbit hole. But will war be an effective, sustainable policy? I believe in what Saint-Exupéry here in France said about war. No one wins. There's just the last to rot. I don't believe in a nuclear military solution. So what does that leave us with? That's my opinion. What does that leave us with? It leaves us with either competition or cooperation. It leaves us with what the IMF kind of telegraphed in 2020, some type of reset. It leaves us with what Scott Bessent is talking about, some type of Bretton Woods 2.0. It leaves us with the ultimate debate between John Nash and John Adams, or excuse me, John Smith, or Machiavelli. There was that famous scene you and I talked about off record the other day of that movie, The Beautiful Mind, with Russell Crowe, where John Nash, in Equilibrium Theory, this great Princeton Nobel laureate who comes in a bar in Princeton, and there's a bunch of guys, and one beautiful woman walks in the bar, and they're all trying to get her. And John Nash says, that's actually not the right approach. It would be better if we cooperated, because if we all go after the same girl, most of us are going to lose. Her friends are going to be offended. What would be better is if we cooperated, because what's best for all is best for the individual. And one of the men in the film and one of his students said, well, that flies in the face of Adam Smith, excuse me, not John Smith, Adam Smith, where the individual ambition is good for the collective. And he says, no, we have to rethink Adam Smith. What we're doing right now with our tariffs and with our dollar policy and with our military policy is a winner take all, winner loser kind of Darwinistic approach to tariffs, a Darwinistic approach to protectionism, a Darwinistic approach to foreign policy. Again, some will be for it, some will be against it. I would argue more with the equilibrium theory of John Nash that cooperation is better than military conflicts. That is very Pollyannish, and some would even say communist, of which I am not. But I believe the better thing would be to cooperate. Is that realistic? No. So what we're probably looking at is more of a kind of coalition tribal reset with the G7, with the IMF, with the BIS telegraphing this. My question is, how do we do a global reset without the cooperation and the collaboration of the BRICS and Russia and China? And so, who am I to say if that's possible or not? Will it take more pain before we get to that type of resolution? how many millions of Ukrainians have to die in an unavoidable war before we realize maybe peace is a better option, which we were so close to 3 years ago in Turkey. So again, we have to do stupid things before we get to cooperative things. And who am I to predict how it plays out? I certainly know how the dollar plays out because I know how debt plays out. Whether we do gold revaluation, whether we do stable coins, whether we find peace in the Middle East or the Ukraine, we still have a debt problem. And of course, I'm not saying it's the end of the world or the end of America, or the end of the dollar. It's just a very, very different world and a very more difficult world, especially for the middle class and those who aren't protecting their currencies. So I don't know, Michelle, but we do know what's happening in real time is already bad enough. It'll probably take more irrational, stupid policies that fail until we're literally at a point where it's either sink or swim. And hopefully we learn to cooperate. But it reminds me of that scene in the Titanic where everyone's calm at first. Then you realize the water's rising. Then you realize there's not enough lifeboats. And instead of being cooperative, it's every man for himself. It's no longer the gentleman. It's no longer the decorum of ladies and women and children first. And it's just every man for himself. And unfortunately, and I've said many times, whether you love him or hate him, Trump is not a leader. He's a winner. He believes in a winner and a loser. Some would admire that. That's the way he was raised. That's the way he thinks. That's the way New York real estate works. The way foreign policy works, the way the State Department works, and the way peace works is you have to be cooperative. You have to be more John Nash than Machiavelli. That's my opinion. Again, many will disagree, but it's almost irrelevant because the reset to come will have to involve, as the IMF said, they literally, I'll send you the graph after this interview, the whole basis for the new Bretton Woods 2.0, the whole basis is gold at the core. It's the best part of a bad idea because the other thing that comes with this new reset, which they telegraphed in 2022 or something, is central bank digital currency,
Right.
which, by the way, is just stablecoin. That's a segue into stablecoin. So it will be more centralization, and gold will be the good part of a bad plan. I've always said centralization is the end game, whether it's cooperative or not. It's less civil liberties and less financial freedom for all of us.
Yes, you have said that, and that does bring us to central bank digital currencies. If centralization is the end game, we touched on stable coins as a way to perhaps create more demand for U.S. treasuries, but let's use that as a jumping point to talk about CBDCs or central bank digital currencies. And a reminder to our viewers, those are government-issued digital dollars. They're programmable, they're traceable, they're centrally controlled. And again, the real concern is control, because a CBDC would let the government track every single transaction, track your spending, limit how or where you use your money, what transactions are allowed or not allowed, can even make your money expire if not spent within a certain amount of time. The biggest concern is that it gets linked to a social credit score, and that ultimately leads to an Orwellian dystopian future where if you don't behave, your money isn't being, you can't use your money, or you can only use your money to do certain things that the government allowed. And again, people say this is ridiculous, but A, it's happening in China with their social credit score and the digital yuan. And if COVID taught us anything, it's that when given the ability, governments will exceed their power. I remind our viewers that there were curfews in countries like Canada, where the truckers who were protesting against the vaccine were kicked off the financial system. And that's a lot easier to do when you have a CBDC. In certain countries, there were curfews, and certain goods were deemed essential or non-essential. With a CBDC, that money can be programmed to just not be usable to conduct a transaction that the government may deem is not essential at a particular time and period. So anybody that knows me knows that CBDCs are one of my really, really pet passions. And the good news is that the Senate is expected to vote on an anti-CBDC bill that bans the Fed from creating one. That bill is still in progress. The language there may change, but essentially it's the Anti-CBDC Surveillance State Act, and it's designed to ban the Federal Reserve from issuing, testing, or implementing a CBDC. But as you mentioned, we have had the Genius Act pass. That has passed already. And critics say that this could be the stealth gateway to a CBDC-style financial system through stablecoins. What this act does is it creates the framework in the U.S. for payment stablecoins. Again, for our viewers, that is digital tokens pegged one-to-one to the U.S. dollar, fully backed by high-quality liquid reserves like cash or short-term treasuries. Only approved issuers like US banks, credit unions, financial firms can offer these tokens to the public. On the upside, it may create more demand for US treasuries. These companies do have to comply with AML, KYC, and OFAC rules. They have to submit to federal oversight, mostly from the OCC. Now, this law, to be fair, does keep the Federal Reserve out of direct issuance. But what it does do, according to some critics, is that it lays the foundation for programmable money, surveillance-friendly digital infrastructure, and a multi-trillion-dollar ecosystem of narrow money, digital cash that does not circulate through traditional credit creation, held as tokenized treasuries, and sort of lays the groundwork for a potential CBDC, especially if this anti-CBDC bill doesn't get passed. So what is your take on this?
Well, you said so much there that is so good, and you are passionate and have been consistent in your concerns about central bank digital currency. And I want to answer
I'm
them
a
all.
libertarian, Matt. Essentially, I'm a libertarian. But go ahead. Is
It's
this a
very
concern?
clear. It is a concern, and there's a lot of reasons. And again, it goes back to the very opening point we made about debt. And I've said also, and many others would remember this, when you have a debt crisis, that leads to a market crisis, a currency crisis. It usually leads to a debt crisis. Obviously, the debt crisis leads to a currency crisis and a market crisis, and that leads to an inflation or a debasement crisis. And when the currency is debased, that leads to a social unrest because you're no longer able to buy things with your currency. Social unrest is always, without exception, solved by extreme centralization from the political left or right, the extreme left or right. And this is true throughout history. So again, debt to centralization is proven by history, not optimization models of the FOMC. That's why history and math both matter, which brings us to stablecoin, CBDC, and all the questions you've raised. Again, the Genius Act, like the Patriot Act, like stablecoin, they're all oxymorons. To me, the stablecoin is neither stable nor a coin. The Genius Act is not a Genius Act, it's a stupid act. And the Patriot Act was not patriotic. But those are just sensational things to say. What do I really mean by that? How are these things oxymorons? And to your point, hey, it's stablecoin. It's not CBDC. In fact, the same Genius Act was a bill that came out and it's being passed at the same time they're bringing this anti-CBDC Act out. And then whether stablecoin should be SEC or CFTC registered. So these three acts coming out at the same time. This is a classic example of the smoke and mirrors kind of disingenuity of DC legislation and the complexity of the plumbing. And I'm sorry to be so perma-cynical, and some would say tinfoil hatted, but let's be clear. Stablecoin is CBDC by just another name. It's not issued by a central bank. It is issued by the JP Morgans of the world, the Tethers of the world, the Circle Internets of the world. And I'll explain why that's no different than a central bank in a second. But let's first be clear. The fact that they're outlawing central bank digital currency to calm the libertarians like you down from being intimidated is an insult to your intelligence. They're hoping that you don't understand the plumbing of what's really going on with stablecoin and the DLT ledger and the ISO compliant technology and the programmable trackable technology and the censorable technology that is still behind stablecoins. So no, it may not be from the Fed, but it's coming from JP Morgan, it's coming from fintech groups, and it's coming from these kingmakers that the Genius Act just made, including Tether and JP Morgan. If you don't think that that's linked on that DLT ledger to the government and you believe that's separate and private, that's your opinion. I'm saying my opinion, that's no different. That's half a dozen of this, six of the other. It's not just an entry drug to CBDC, even if they outlawed, but it's just another form. These banks, the Fed, the fintech, JP Morgan, they're all part of a way to track and program and seize and censor your assets. That's the first thing. So no, stablecoin is not anti-CBDC. It's just another version of it. I strongly believe that, and I'm certainly not alone. The other thing about stablecoin, it's really basically backed by U.S. Treasuries, of course, short-term Treasuries, but that assumes that U.S. Treasuries are stable. And if we learned anything from the banking crisis in 2023, Signature Valley Bank and First Republic were stable yesterday or one day, and they weren't the next day. In other words, this stable coin is a unit of account. You give $1 to Tether, you give $1 to Circle Internet, you give $1 to JP Morgan's a stable coin account, and you'll get $1 of electronic spending back. Meanwhile, those will take your dollar and they'll arbitrage it in the treasury market, and they'll get yield, and they'll make money off of your dollar while you go out and spend it anywhere you want with your e-dollar. It is a way to create demand for U.S. treasuries. It's a way to create demand for the U.S. dollar right now because of stablecoin. Tether has made $26 billion in profits off of your dollars because they're arbitraging that on the treasury markets. And they're also now the 18th largest lender to Uncle Sam. So it's a win-win for Tether, Circle Internet, JP Morgan. It's not necessarily a win for you, the citizen. It gives you an e-dollar, but you're getting no yield on it. And you're subject to the risk of the treasury that backs that quote unquote stable coin. Again, you could argue there's no risk. I would remind you that there is a risk in treasuries, and you don't have to go that far back to see it. So again, it's not necessarily as stable as you think, and it certainly is not as freedom giving as you think. And it is very much CBDC in substance and form, in my opinion. So there's a lot of things wrong with it, but it's making these kingmakers very wealthy. It is a wealth transfer. There are sons of presidents and other insiders from Silicon Valley to DC who are going to make a fortune on this. That may be business as usual in DC, but it's no surprise there. But it's a kingmaker too, because only commercial banks can actually offer a stablecoin client some yield. The fintech companies can't. So they just made Jimmy Dimon even more powerful. And this goes back to this idea of the marriage between big banking, big government, big corporations. Again, I'm an American. I'm a patriot. Come from a family of veterans. Spent half my life in the U.S. I baseball scholarships. Please, I'm not anti-American, but if you're a patriot, you got to ask, is this patriotic? Look under the hood, look at the details. I don't think this type of marriage between big corporations, big lenders, and government policy is, to me, and this sounds sensational, the very definition of fascism, not democracy. And the fact that your programmable, trackable, seizable stablecoin just puts you into the gun sights like those Canadian truckers. If someday, 6 years from now, I write or say something that offends, or I join a group that offends the powers that be, I am now censorable, trackable, and seizable. I think if Thomas Jefferson, John Adams, George Washington, and Thomas Paine, and you name it, tried to get together in Philadelphia under a stablecoin regime, they probably wouldn't be able to even afford the bus fare there, because by the time they wrote a couple of articles or got a few pages written or did a few interviews, they'd be trackable. So this may sound sensational. We should be very concerned about technology that outpaces wisdom. This is the problem with AI. This is the problem with the complexity and the plumbing of stablecoins and the disingenuous lipstick on a pig they put on it. It is an effect. Maybe it doesn't matter to some people. It doesn't mean you have something to hide. I have nothing to hide with my money, but I do have the right to privacy. I do have the right to keep what I've earned. I don't like a system that can track and seize my assets because it's masquerading as some type of technological efficiency. And again, I'll quote Saint-Exupéry, who said in the 1940s, we were capable of manufacturing 1,000 pianos a day, just not one worthy pianist. Just because we have technology, just because we have a lot of smart programmers, doesn't mean they're wise programmers, and doesn't mean the policies used by them are for our civil liberties or financial freedom. And this should be a concern to all critical thinking Americans, regardless of whether you're tech, left, right, pro gold, pro crypto. I'm all of those things. But there is a limit to the wisdom of this technology outpacing our political intelligence. And there's a dishonesty in not divulging and disclosing the risks behind the technological hype and the stablecoin. That's a long answer. I'm a libertarian too, Michelle, and it really upsets me. This Genius Act, which is the very opposite of genius, and this coin, which is the very opposite of stable.
Well, I think we're on the same page on that one, for sure. Matthew, we're running out of time, but I do have to get your thoughts on a couple of other matters. Otherwise, it would be I would be remiss of me if not touched on Bitcoin. You mentioned crypto. Let's talk about Bitcoin, because Bitcoin has recognized a lot of the same issues. CBDC, one of them for sure, but Bitcoin has recognized the same systemic issues that you've warned about: the sovereign debt crisis, the loss of trust in fiat currencies, debasement, devaluation. But instead of gold, they see Bitcoin as the answer. They draw strong parallels between the two. Both have finite supplies, are decentralized, represent essentially a libertarian form of money. Bitcoin is borderless, instantly verifiable, portable. The maxis see Bitcoin being layered in to the system somehow. How do you see Bitcoin fitting in here?
Look, Bitcoin and Ethereum are not nearly as censorable as stablecoins, for example, and some of these other technologies.
Not so much as not in the CBDC kind of conversation.
Oh,
and I would not group, and I personally would not group Ethereum and Bitcoin in the same category either.
Not at all.
But I'm saying if Bitcoin is seen as digital gold, and if gold is potentially a layer to some kind of monetary reset, and a way to bring back trust and confidence into the system, can Bitcoin play a role here? Do you see Bitcoin playing a role? Could there be some kind of monetary reset with gold and Bitcoin?
I mean, it's a very fair question. I'm not one of those gold fanatics, gold bugs, or gold executives that has to mock Bitcoin to promote physical gold. I have a lot of close friends who are in the crypto space in general, the Bitcoin space in particular, and including Ronnie Sturfula, who writes the In Gold We Trust report. He takes crypto very seriously, takes Bitcoin very seriously. I don't think crypto investors or Bitcoin investors are insane for what they're doing, and I have a lot of conversations with them. And I learn a lot with each conversation. I don't think we have to be at odds to discuss Bitcoin and gold. First of all, our macro views, our libertarian views, and our sound money views about the U.S. dollar and the U.S. Treasury are basically identical. So 80% of the conversation between a Bitcoin expert and a gold executive are very symbiotic and osmosis and commensurate. The question I have is not a criticism. And I think it's a question that even serious Bitcoiners have to consider, and gold investors have to consider too, with Bitcoin in particular, because it is a much safer, less censorable technology. And we got to get into the origins of it or what that means, or Ripple and XRP highways and all these other debates, and Glenn Lilly and Jeff Mann and BTC. Is it Langley or Satoshi? Get past all that. Is it a store of value? Will it work in a system where the dollar doesn't disappear or become eradicated? It becomes less and less relevant, less and less safe, and less private. So will Bitcoin be a solution? The simple answer is, and will it be a part of this new world order, disorder, whatever reset to come? Without saying the Bitcoin camp, it depends on your perspective. I can say I see central banks stacking physical gold more than Bitcoin. I can argue that gold has an historical larger role as a store of value than Bitcoin. But certainly Bitcoin in a cold wallet is a heck of a lot easier to transfer. It's cross-border, it's safer, it's more private, etc. So I don't want to say that, that when gold rips, Bitcoin disappears and it's going to go to zero. What I think all of us have to look at in this debate is ultimately, despite the common macro view that Bitcoin and gold investors share, will Bitcoin continue as a speculation asset? There's nothing better. It's outperformed everything on its highs. It's certainly outperformed gold. Is it still a store of value? And I think the jury's out on that. I have strong opinions, but I don't want to mock Bitcoin investors for that. I think what will be interesting in the evolution of Bitcoin is what happens when we have a Bob Farrell moment in a 49x, earnings ratio on the Nasdaq. If the Nasdaq has a mean reversion moment, how will Bitcoin track? Will it track north as the Nasdaq tanks, or will it track and correlate to Nasdaq and show itself as just another speculation tech stock, or will it divert? Will it convert outside of the Nasdaq narrative and show itself as an independent store of value? And we can argue, what is the store of value in Bitcoin? Is it its technology? Is it its price? What is it in gold? That takes hours. I don't want to mock crypto, and I certainly don't want to mock Bitcoin. But I think the real test will be, how does it behave in an uh-oh moment in the markets? We know how gold behaves. We've seen what it does, and we can track it. And we can argue we know how Bitcoin behaves in certain pullbacks or corrections, but we've never really seen Bitcoin in an uh-oh moment like '08, '87, 2001, 29. We've never seen it like I saw in the dot-com bubble, where what we thought were the greatest things lost massively. Bitcoin is not Amazon losing 92%. It is not the same thing as Amazon. But I think it'll be very interesting. And I think as a speculation, as an investment asset, there's nothing greater. It has a massive standard deviation, a massive volatility, which for me makes it harder for me to see as a store of value. And as a person who speculated on pre-IPOs and IPOs in the dot-com bubble, I am all about chasing the momentum and the sentiment to make money when I see something that obvious. And the question I have, and I'm not going to answer it, that's for everyone, is Bitcoin a sentiment momentum trade, or is it a new technology, a new libertarian way to store value and spend money? I think there are strong cases to be made for both. I'm not going to solve that today. What I love about the Bitcoin narrative and the Bitcoin rise is its disdain for reckless central bank policy, reckless currency policy, a government that insults your intelligence by trying to take your privacy and tell you it's good for you and that it's modern. I think all of those things about Bitcoin are extraordinary. And so I'm not going to make my gold case by insulting a Bitcoin crowd. And I think the guys at Black Swan Capitalists and others who know this space are far more fluent than me. And I know some very bright people um, who are all about gold and also recognize and respect Bitcoin. I don't think it has to be a civil war between the two camps.
Well, I've always said that I'm in the camp of both gold and both Bitcoin. Underlying philosophy is the same there, but I get your point that it's still a risk-on asset, and until we see it as a risk-off asset and really decorrelate it from the Nasdaq and the markets, it would be interesting to see how that plays out as a store of value. Very quickly, people say that quantum computing poses a potential existential threat to Bitcoin by potentially breaking the encryption and undermining its security. Not going to have you weigh in on that. We'll get a Bitcoin expert to weigh in on that. But is there an equivalent existential or systemic threat to gold? What would be the gold quantum computing existential threat equivalent?
Yeah, listen, and for any credibility to be a gold investor, and certainly someone who's a fiduciary in the gold space, if I just said gold only goes up and to the right, the gold has no risk, and the gold is bulletproof in every way, and that you should look at nothing else, I wouldn't listen to me either. And I think and I think about this all the time. It must be the prey or the predator instinct. What's going to screw me? That famous line in The Big Short. Where do I get screwed? What am I missing in the gold thing? What would be a demand killing event in the gold market? I mean, Francis Hunt's a great friend. I spent a lot of time in South Africa at the beginning of the year. He was a major gold bull, but even now, on a technical basis, he's seen some price pressure on gold, and that's a technical trading mentality. But the long-term direction of gold, we both agree, is very high. But to your larger question, what would really be a true existential threat to gold? Well, it's very simple, because if you understand why gold is successful, you would understand why gold would be unsuccessful. And again, I've always said that we're not seeing a gold bull market, we're seeing a fiat or paper money bear market. A 400-ounce bar when I was born was about 17 grand. Now it's worth about 1.4 million. That gold 400-ounce bar didn't get smarter, shiny, or more useful. It's just that the dollar since 1971 got weaker. And the dollar got weaker, imagine that, because of our original theme, debt and debt expansion, exponential debt expansion, which comes from credit expansion, which creates more dollar debasement. So if the dollar weak and the debt weak dollar made gold strong, what would make gold weak? It would mean lower debt, better spending, not a gold-backed currency, but sounder monetary policy. So, for example, if we got our debt to GDP down to 70% instead of 120%, if we kept a balanced budget, if we had free trade and we had peace rather than war. In other words, all these Pollyannish things, which I hope are actually possible. I look forward to the day where the world is so soundly run by intelligent men and women who agree with free trade, who agree with spending within their means, who agree that productivity is key to growth and that you can't grow without debt, that we have to live within our means. In other words, if we had a balanced budget, balanced deficits, free trade, and less war, gold would lose its value very fast. The problem is, and I'm not a cynic, I don't see any of those things happening in the near term.
But would it though, Matthew? Because gold has been around for thousands of years as a store of value, as a sign of wealth. I mean, it's not dependent on the dollar and on debt. Gold has been seen as money, as a store of value for thousands and thousands of years. It's withstood various
Oh, of
empires
course. When I
rising
say
and
it would
falling.
go down, it wouldn't go
So,
to zero. I would never say that. It just wouldn't see these exponential moves. And again, it will always have, well, again, this is going to the Bitcoin. What's the use of Bitcoin? And we make fun. Well, gold for fillings, jewelry, and earrings and wedding rings is it's more than that. But you could argue that there's not a lot of use for gold. But no, it will. And I would hope if we actually did get to sound debt, sound deficit, sound management, that would be, to Ray Dalio's point earlier, that's the point way down the road after a great deal of wisdom and reflection and cleaning the blood off the streets of all the disastrous policies we're in the process of doing right now. That's the point where you could have a gold backed currency, as our founding fathers argued from Article 1 of the Constitution. They had just come out of the French Revolution. They had just come out of England. They had just come out of taxation without representation. They wanted a currency that was real money that they knew could not be debased and politicized. And they said right there at the first opening of our Constitution, gold and silver. And what did we do? We ruined that. By 1971, we killed it. We messed with it in the 1860s and the Resumption Act of the 1870s. In the 1913, when we created the Fed, we found ways to destroy that founding principle. But our principle and our founding educated, I think, far-sighted founding fathers wanted sound money. And what Ray Dalio wants to get us back to is that sound money. And that's where gold would be valued as our real money. Do I think that's going to happen? No. I think fiat money will still be needed to debase the currency, to run this absolutely maniacally poor monetary policy, to keep people in power and to distribute that wealth transfer among a very small minority of insiders. And that is the libertarian in me and the cynic in me. But if we get past that, then gold will come to a mean reversion of normalcy and rationality, where its value will be based on as actual money in a system that is gold backed. I think we're a long way from there now. So again, I'm not saying gold goes to zero. I don't think of a demand killing event that could theoretically
but
hit Nvidia or theoretically hit Bitcoin.
But is there like an existential threat? And I'm bringing this back to one of the comments that was made in some of our videos, and we do read the comments, so please make sure to leave them. And one of the viewers was asking, what about a meteor hitting the Earth with tons of gold, and
Yeah.
that's sort of changing the supply dynamic? Gold being made in a lab, similar to like lab-grown diamonds. Do you see any kind
Yeah.
of yeah, you see that
Yeah.
happening? Do you see any like
No, I don't.
existential gold threat?
There are many the alchemy necessary to find an alternative or to create gold. I mean, it's been tried for centuries because gold has been known for centuries as the only real money. And again, this is the argument many anti-Bitcoiners would make: is Bitcoin and blockchain ISO compliant technology is just alchemy, but it's not really an asset on the periodic table, so to speak. I don't think that's a fair assessment or a fair criticism of Bitcoin. There's other values to Bitcoin technology, but whatever that technology is, however extraordinary it is, it can't compare to the indestructible nature of physical gold. I mean, as David Frisby and Alistair talked about years ago, it literally was created before our universe in the Big Bang. It came from something before even the Earth was created. And as you and I talked about elsewhere, there is literally a small amount of physical gold in our bloodstream. So there's something almost spiritual, visceral, timeless, and biological about this, almost something biblical, you could argue, about real money and sound gold. The Old Testament, the New Testament have had ways to criticize and critique gold and silver. Jesus was portrayed for silver coins. It's part of our culture, it's part of our narrative, but it's also part of our solar system. It's part of our DNA. It's definitely part of our system. So I don't think a new alchemy, a new created metal, could replace gold. Yes, I suppose a meteor could land on the Earth and create a new supply. I don't think the demand will ever change. I don't think the stock
Okay.
to flow will really change. So that's my view.
All right. So no major existential threats. Good. Good. At least we put that out there. And again, we do read the comments, so make sure to leave them.
Yeah,
Look,
I could be wrong. Yeah.
let's wrap up here. And again, you advise clients, I believe, with at least $5 million in assets. You have your finger on the pulse of what's really happening with the world's wealthy. What are you seeing? Tell me what you're seeing right now, and how that ties into your highest point of conviction.
Yeah, of course. I mean, look, it's a really wonderful opportunity to talk to some very successful people in different areas of life. And we have clients from over 90 countries. Most of them are self-made. They come from all different backgrounds. Our minimums are high, so they've gotten to a point in life where it's not about getting more wealth, it's about preserving their wealth. And so we have these conversations. They usually come to us pre-converted, so to speak. They already understand why gold, and now they're about how do I own my gold? How do I protect my gold? How do I legally keep a firewall between me and my government legally? And how do I ensure my privacy? How do I stay outside of the system? We have clients that come from the banking system. We have clients that ran money and portfolios and hedge funds. I myself and my partners are almost all former bankers. When we critique or look at how the sausage is made in the banking system, it's not just to be anti-bank, it's because we saw how they work, we see how they work. So these clients from different backgrounds, different professions, many of whom are from the financial circles, many have made their money as entrepreneurs, many have made it in Bitcoin. And converted their Bitcoin to gold. Again, not saying that Bitcoin's wrong, but they had the view that it was a speculation asset. Now that they've ridden that bubble as far as they want to take it, they're going to hold it in gold. Others will convert gold to Bitcoin, but we all agree in the central themes that I've been talking to you about. So your audience, whether they have 5 million or $5, should have the same knowledge. And the same knowledge is this: it is true what David Hume and von Mises said. Debt does destroy. It does destroy nations. It doesn't ruin every life. It doesn't end the world, but it ruins your freedoms. It ruins your choices. We're seeing this in real time. Even those with escape velocity money are worried about their civil liberties and their privacy and their financial privacy. Again, not because they have something to hide, because they have something to protect. We're all concerned about politics. We're past the left or right debates. We're just seeing a debt crisis leading to more centralized control. That syllogism I talked about earlier, that's not extreme. That's very shared by very sophisticated families, family offices, investors, bankers, hedge fund managers. Of course, I can't give you their names. You'd be very surprised who some of them are. So these are not gold bugs. These are not tinfoil hatted. These are not anti-Trump, anti-Biden. They're just smart money. And it's way past politics now. It's way past even thinking we can solve all these problems. We can't. The one thing gold does for us and our clients is, at least in the financial part of our lives, I can't dictate policy in the Middle East, the East, Cambodia, India, the UK, the Ukraine. I have no real power over that, but I can protect whatever wealth I've earned in a long life of working very hard for it, just like our clients. And your listeners who aren't going to make $5 million minimums and be my client, that's fine. 99% of the people I talk to can never be our clients, but they can always protect themselves. And I take just as seriously a 27-year-old kid who'll fly from London to Zurich just to talk to me as he's stacking a few thousand in gold. He's just as valuable to me as the billionaire who's got a couple hundred million in gold. They're all people who care and work hard for their money and care about their personal freedoms. And I mean that sincerely. And I never forget my origins. I'm from the very lower middle class. So I take the hard work seriously of acquiring wealth, and I take the desire to protect it. And I'm very offended by the government's slow frog boil destruction and the slow tax on all people, in particular the working poor and the middle class, which is where I come from. And that angers me and incites me to understanding gold better. And again, whether you're a millionaire or whether you're not, you can afford some grams, maybe even some ounces. It's not a get rich quick. It's not a Nvidia trade. It's a protect yourself trade. It's an autonomy trade. It's a preservation trade. And that is true of millionaires to non-millionaires to billionaires. And yes, all of our clients, all of the things that we're talking about tonight, and we could spend hours on, understand this pretty much axiomatically. We're well past left versus right. We're well past any faith in any immediate solution. And we're not in the point of arguing that we're speculating for gold. We're doing this as a protection asset. My partner and friend, Egon von GREYERZ, very successful as a FTSE 100 chairman, made a lot of money at the turn of the century, bought gold at $300. He has never looked at the price. He has never looked at the price. It was never speculation. It was just because he saw 25 years ago banking risk, geopolitical risk, and currency risk. He was right 25 years ago. He's just as right today. Yes, the gold he bought at 300 is worth a lot more. Yes, he's happy about that, but that was never his motive. His motive was to get out of this system, protect yourself in an asset that stores its value. And by the way, has massive speculation value over time. But we're not a get rich quick asset, and we're a get rich quick company. It's a stay rich company, and it's a protect yourself company. And again, for people that can't make the minimums, you can still protect yourself with whatever you can afford. And I realize that's very hard for some people to imagine when they can barely make it through the month. That upsets me the most. In some ways, that's who I'm trying to talk to the most, even if it's just a gram a month or an ounce a year. Please try, if you can, to put it aside. I'm not promising you 10x multiples and instant wealth. I'm trying to protect you from the slow drip eradication of your purchasing power and your paper money, which to me is an insult to your intelligence.
All right. And I take it that is your highest point of conviction as we wrap up. Any final thoughts,
For
Matthew? And where can people find you?
Uh, yeah, I mean, myself and Egon and Alistair McLeod is now an advisor, along with Ronnie Sturfla, the author of the In Gold We Trust report. So we have a really great team on the front end. Our back end of partners and service providers are amazing, but we can be found at vg.gold or von GREYERZ.gold. And our classic URL is always goldswitzerland.com. And interviews like this, articles that we've written, white papers on Bitcoin and gold, on all the issues on stablecoin, on gold revaluation, going back recent to 20-year library of articles are all there. And there's a whole page on why gold and how to own gold. Again, you don't have to be a client to get that education. Yes, it's a very biased education, but it's also a high conviction education, and it's yours to look at it for free. Obviously, it's not just about getting more clients. We really do want to educate as many people. Both Egon and myself are past the point where we measure ourselves by those metrics. We really want to have a legacy of educating what we can about sound money. It doesn't mean buy gold, but you should look at gold because gold is attached to history, and history is attached to math. And history and math are confirmation that many of the things we've been told are just untrue, and many of the answers are more desperate than honest. And that's really the fascinating part of the gold investment for me.
Matthew, I really respect the fact that you own your bias. I think if we're all intellectually honest, we all have a bias, but coming out and saying it and owning it, but still being open to other perspectives is the really only way to learn and to grow. So thank you so much for helping our viewers learn and grow today. I really, really appreciate your time, your analysis, and your very, as always, colorful metaphors. Thank you, Matthew. Really appreciate it.
Well, it was my pleasure as always, Michelle. Thank you.
And thank you for watching. Make sure to subscribe to Miles Franklin Media and The Real Story, where we show you the real risks, the real shifts, and the real opportunities. Please comment. Feel free to praise, whine, or just opine. We do love hearing from you, and we definitely do read the comments and the feedback. For me, Michelle Makori, and the rest of the team, we'll see you next time. Thanks for watching. Stay sharp, stay soft.